Hello, everyone, and welcome to today's Technology Tuesday presented by Out of the Box Technology. Today's topic is detecting and preventing accounting fraud. My name is Jennifer Darachuk, and I will be your moderator today. If you have any questions as we go through the presentation, you can go ahead and send those to me using the GoToWebinar chat function, and we'll make sure to answer your questions as they come up. A little bit about us here at Out of the Box Technology. We are a team of QuickBooks experts doing training, integration, hosting, and support surrounding all versions of QuickBooks. We also have a whole team of bookkeepers that do recurring and on-the-spot bookkeeping services. And we have a development team that works in web design, custom app development, and data migrations. We also now are so excited to announce that we do fraud prevention and detection services, as we're going to talk about today, as well as tax prep, thanks to our recent acquisition of Powerful Accounting. And joining with us today is Dawn Brolin. Dawn is going to talk to us about detecting and preventing accounting fraud. She has a glorious background in this area, and we're just so pleased to have her join us today. Before we get started, I just wanted to flash up our learning objectives on the screen today. As you may know, for the last month or so, Out of the Box Technology has been able to offer CPE credits for our Technology Tuesdays. So here's some learning objectives for today's presentation, as well as a little bit of information about the continuing professional education credits that you can earn today. We'll have a few polls as we go through the presentation, as well as a survey at the end of the webinar. So at this time, I'm going to go ahead and hand things over to Dawn so she can get started with today's presentation.
Well, that's awesome. Thank you so much for the introduction. I'm very excited to be a part of the fantastic team at Out of the Box Technology and helping them with their existing client base, and of course any and all accountants that are looking for some guidance when it comes to detecting and preventing accounting fraud. Very excited about that. So we'll go ahead and just kind of get started here and move on in the presentation here. My name is Dawn Brolin, like Jennifer said so eloquently. I am the Executive Vice President of Business Development and Compliance at Out of the Box Technology. I am a CPA, a Certified Fraud Examiner, and I've had some awards, but I've been working in the field since 1999. The things that I really love to do the most are fraud cases, and also working with people who are maybe in a lawsuit, trying to map out financials and things like that. It's very, very exciting for me. I just actually want a client just left the office here who's just gotten himself into a little trouble. We're going to help him out of it, and we're real excited. So if you love fraud, well, nobody really loves fraud, but you love to fight against fraud, I'm your girl. I'm the person. Visit fightagainstfraud.com and join the Fight Against Fraud, where we will be doing actually more of these types of presentations for the Fight Against Fraud. Along with in the Fight Against Fraud, we have a lot of nice templates and some things that people can capitalize on if they want to get involved in tax resolution services, which is like offers and compromise, civil and criminal audit defense, and so many other things, non-filers and stuff. So it's pretty fun. I'm having a really good time doing it, and love that I have a team that can help me, keep this all together. And Jennifer's been fantastic. So I'm real excited to be here today. So what the heck are we going to talk about anyway? Our learning objectives today: understanding types of accounting fraud. So there's certainly occupational fraud, there's tax fraud, accounting fraud. There's so many different ways that people unfortunately are stealing from others. We'll talk about identifying some of the potential suspects that we may want to keep our eye on, and who are they, and what should we be doing in identifying who they are. What red flags might we come across that would indicate a potential fraudulent act or potential future fraudulent act? We'll talk about some red flags there. We'll learn how to minimize the risk for your clients about fraud. Now, if you are a small business owner and you are on this call, I'm going to help you learn how to minimize risk for yourself. And so this is an area that I think has not been discussed enough in our industry. And so whether you're an accountant or whether you are a business owner or both, you should be really have your eyes set on making sure you're minimizing the risk within business. And then I'm going to give you a couple of real examples so that you can see, exactly kind of what is actually happening out there.
Awesome.
So
hey, Don,
yeah.
before you jump into understanding the types of accounting fraud, I'm going to just run our first poll after you went through those learning objectives. I think it's a good time.
Sure.
I'll just run to the audience here and launch this first poll. Just a quick question. Do you think there's a fraud risk in your business?
Simple. That's a simple question.
Simple question. So let's see where you guys all stand, what you think, and I'm sure after Don goes through, maybe your answer will be different. So
maybe it will change at the end, because it's so interesting that sometimes people think that, there aren't any fraud risk in their business because they trust everybody in their business, and trust is important. There are some people that say that trust but verify is not the way to go. And I personally, in my opinion, after what I have seen happen in business, that there is fraud and you can trust, but you better verify that things are running the way it needs to
Absolutely. Absolutely. All right. So it looks like well over 85% thinks that you're probably going to tell us otherwise. So I'm going to go ahead and close that first poll. Thank you to everyone who participated. And Don, take it away.
Sure. So let's just talk about some of the types of accounting fraud. So stealing money. So this is one that happens. It happens every day. One of the biggest things is that bookkeeping is an unregulated industry, meaning bookkeepers, they're not required to be certified. They're not required. There's no minimum requirements. Typically, people don't do background checks on their bookkeeper, and those are the people who are touching their money the most. Whether the books are outsourced, and it could be an outsourced bookkeeper, it could be a hired bookkeeper. And it's important that we in our industry as accountants, as outsourced bookkeepers, as CFPs, whatever we are, we need to make sure that our clients understand that this type of thing happens every single day. People steal money. And as a certified fraud examiner, I look at every single transaction that I make when I'm out there buying or purchasing anything. I'm watching what's happening behind the counter. And it's interesting. You start to look at things a little bit different. So stealing money is one type of fraud, of course. Stealing time. Well, there's nobody that knows that any better than Matt Rissell, who decided that his people were, doing the beat the clock with the handwritten timesheets or buddy punching. You've heard of that, where somebody else punches in for you because you're late. Having long lunches or extended breaks, or goofing off. Employees that have temptations while they're at work, they're too much socializing, that water cooler scenario. And we don't want to be jerks to our employees, but at the same time, stealing time is a very big loss for business owners. They may be paying $10,000, $15,000, $20,000 extra between wages and taxes over the course of a year. And I don't know what you think, but that's a lot of money to me. That is a lot of money. Then you've got, the internet. You've got issues with phones. People checking their personal emails, checking phones, playing mahjong, using social media. And there are ways that you can supplement a human's need to take a break, so that you don't want the employee at the desk pounding away for 8 hours straight. You want them to, hey, I'm going to take a 15-minute break and play Candy Crush. That's cool. You can do that. But what we have to understand is that if they're doing that and you're preventing them from doing it, is one thing, but just make sure you're paying attention to what's happening, that they're using your company computers. Are they going to the sites that are probably not appropriate? Those kind of things happen. Swipe card shenanigans. So people who have a swipe card, I can say, hey, listen, Mike, you swipe me in tomorrow morning because I'm going to be an hour late. So they give the swipe card, he swipes for me, and I'm good to go. And then, of course, hide and seek, which is another one. When an employee is supposed to be at work on site with a client, and the employee clocks in for 5 hours, we bill the client, but really the employee was only there for 2 hours. And that's where you find and detect those types of things. And nobody wants to talk about this stuff, which is, why I try to talk about it constantly, because at the end of the day, this is what's happening. So people steal goods. I mean, I even say sometimes in my seminars that I'm doing live, hey, if you take a pen home from work, you stole a pen. That sounds stupid, right? And that's not obviously what you're doing, but just that simple one little thought about that. So what about stealing goods? This is another example. Theft in the workplace, typically, in this case, should be quick to discover if you're keeping inventory. And so stealing goods, which, okay, who's in charge of, the warehouse? And who's in charge of, if it's, let's say they sell construction lumber, and who knows if, the guy wants to make an addition in his basement and he throws 10 2x4s and, a bucket of nails or whatever in his truck, and off he goes. Nobody pays attention to that. That stealing goods is minimal of an amount. I don't care if it's penny, still stealing. And so whoever that business owner is, they built that business. They built that business as hard as they could. And some of you on the call, may have had this happen to you. I don't know. But really, you've got to just take a look at what your organization looks like. Do people have access to the money? Is there a cash register? Is the cash register drawer open just by pushing a button or turning a key? Well, if that's the case, that's not okay. You should have a system in place. If you have employees who have access to cash, you should have a way to monitor that, or checks even. And then of stealing, if you have employees and you don't have a system to clock in and clock out, and make sure it's authenticated by that person, either through eye scan, face recognition that we have right now, fingerprints, whatever you want to use to make sure people are clocking in and out, and that it's really them that is clocking in and out. Stealing time is a really big problem. And then, of course, stealing goods. Then this is what you have to consider. Do you feel like you have a risk? Well, do you have a warehouse? Do you have inventory? What do you have? And are they being, and are you monitoring your inventory close enough? Or do you have somebody else doing it? Do you double check? Do you do spot checks? Just show up. Stealing money, show up, pull the register up, see how much has been run through the register, and double check to see what's been sold. I mean, again, it's not that you don't trust them. You just need to verify that these types of things aren't happening. So who are they? Who are the potential suspects? Well, wives and husbands. You wouldn't believe it, but I've seen it. I've seen a case where the wife was stealing from the husband and then still wanted additional child support. So, what are situations that may be happening, people that might be the ones that you want to look at? Now, that's you're going to say to me, maybe that's a terrible thing to say, but, and I'm not accusing anybody of anything. All I'm saying is that I have seen a case where the wife was stealing from the husband. Okay, so that's considered a suspect. Now, this one, bookkeepers. Okay, bookkeepers have the keys to the castle. Most small businesses rely on one person to handle all things bookkeeping. And again, I'm not saying that your bookkeeper, or if you're a bookkeeper, that you're doing this, but I need you to be aware. That's what this is all about. The fight against fraud is more about awareness than anything else. And bookkeepers are the front line. It's very often that a business owner will give the bookkeeper access to online banking with their own personal login, not a secondary login where they have the right to, download bank statements or, download bank feeds or things like that. They can actually go on and pay bills online, full access, without the business owner who's not even checking their business account. Again, not accusing bookkeepers, but that's not a great way for a business owner to run a business. At least have some systems and control systems in place so that we don't have to have a situation and put somebody in a position where they would have that, desire to steal. Management, Management is also a suspect. Or, they may be the warehouse manager, and they're the ones who are, telling their guys, hey, listen, just go ahead and, I know you need to re-shingle your shed. Why don't you just go ahead and grab 10 bundles of shingles and go ahead and take care of yourself for the weekend. Maybe given that permission. Now that perception from that worker in the warehouse has totally just shifted into, oh, the manager said it was okay to do it, or the employee sees the manager do it. Oh, I didn't realize we could go ahead and use this construction stuff for myself. Cool, this is great. So we now have management who takes care of that. Supply managers, this is another really fun one. We've seen a case where in a supply manager who was handling all of the inventory so they were the people we order from. So the suppliers, salespeople come in and they work with the inventory manager, the purchase agent, whoever that is in charge of that, and they make a little deal. Hey, listen, I'm going to order this much stuff, but I want you to charge me a little more. And then what we're going to do is I'm going to make sure that I can give you this inventory so you can take it for you personally. And they have like a collusion situation that's going on. And so we see that happen as well, where salespeople who are in, cahoots with the inventory manager, and they make some kind of agreement so that each of them win. And of course, that's dangerous because you never want to have a partner who maybe, you're stealing with them. And then, because guess when it goes down, they're going to throw you under the bus. So that's a whole nother seminar. And unfortunately, family members. I had a client who was a landscaper, and his daughter-in-law was in charge of the books. And so she would handle the books, and the son would work for the father. The son and the daughter-in-law stole thousands of dollars from the father. Now that's disgusting, is it not? It is. And so, again, it's just something you're like, Brolin, this is not possible, but it actually is. Family members, unfortunately, when it comes to money, people in some cases become extremely greedy. So we want to make sure that we are, again, trusting, but verifying that these types of people who we have so much love and trust with we're keeping them honest. That's all. We're keeping them honest. And that's our job. So what are some key indicators, some red flags that we might see that would, kind of say, oh, all right, here's an issue. This may be an issue. So some key indicators, lifestyle changes. And I want to step back just for 1 second, because I think that this is really, really important that you understand just the basic fraud triangle. And in the fraud triangle, there's 3 key factors that go along with why people steal. Why do people commit occupational fraud, where they're stealing from their employer, or tax fraud, where the business owner is defrauding the government? That's another type of fraud. And so the fraud triangle, of course, it's the shape of a triangle. That makes that one pretty easy. But if you think about it, there are 3 pieces to that fraud triangle. And when all 3 sides are present is where we find there to be risk. So the first one is rationalization, okay? So they are able to rationalize, hey, I deserve to take this extra money. I deserve to do this. So I'm going to rationalize why I'm going to go ahead and do that. There's pressure at home. The second one is pressure. There's pressure at home. Kids are sick, can't pay the mortgage, whatever the case may be. And they want to take care of their family first. And so that's what all they have in mind is their family. And that's a legitimate concern. But that's the second part. So since we've got pressure at home, we've got the rationalization, and the third side of the triangle is where what we're talking about today is that they have opportunity. So what we need to do is to minimize the ability and the opportunities that someone may have because they're under pressure and they're rationalizing why they should do it. We need to eliminate the third side of the fraud triangle, and we need to eliminate or at least minimize the opportunities. because they got the opportunity, if they have full access to a bank account, to very easily pay themselves more money if no one is watching the house. We got to take care of our own house. So what are some key indicators that we find with the fraud triangles? So lifestyle changes is one of them. So if you see an employee who is, you know what you pay them, and they pull up in a nice brand new car and they're all excited about it, and you know that, you know, the car they had was fine. They just maybe wanted an upgrade. A lifestyle change can be one of the factors for someone to go ahead and steal. And so that lifestyle change, in my opinion, is a selfish one more than anything. The internal controls. So if you don't have internal controls, if you don't even know what internal controls are, that's a big problem. So for those of you who answered in the polling question that you don't think you have any fraud risk in your business, I'll tell you a quick little story on internal controls. A good friend of mine who runs an accounting company, her CEO was in charge of payroll and was in charge of all other things, and so she was in charge of that, and my very good friend was out, you know, building the business and not really paying attention to the books because it was a CEO, a person that she'd known forever, and she stole payroll from the company. So she basically paid herself net checks with no withholding, no FICA taken out, to the tunes of many thousands of dollars, even up into the six figures. And so internal controls, if you don't have an internal control and you're trusting one person, you're at risk. It's a key indicator. It's a red flag. Financial reporting changes. Are we getting the reports we've always gotten? Are reports slow to come to your desk, to the business owner's desk? You know, what is happening with regards to, well, you know, I kind of eliminated that account because we didn't need that account anymore. You know, things that were excuses and are excuses. So that's really, really important that we're looking at financials and making sure that things are correct. Like I said, slow staff responses where we're getting, you know, people who are not taking care of their jobs and they're not getting back to you when you have questions. Right? And that's really important that we're paying attention to that. So some other red flags: missing or non-existent receipts. So you're, you know, running your business and, you know, they've got a company credit card or whatever the case is, and no one's handing in receipts. That's not okay. It's not okay for someone to have company money and spend it, even if you're the owner. You need a receipt. Everybody needs receipts. The IRS requires it, for goodness sake. So if you don't have a method to keep receipts, you should have one. Receipt Bank is a great app. It syncs with QuickBooks and many other software. It's a way for you, it's a simple internal control. Receipt Bank, yeah, is it great because it organizes your receipts and helps you with your accounting? It's a bonus. But ultimately, at the end of the day, Receipt Bank and T-Sheets help minimize the risk of fraud. And so I think sometimes we get the wrong message when we hear about these apps that are extremely affordable, and we don't realize that they are actually internal controls. It's crazy. So adjustments made on a consistent or inconsistent manner. So how many journal entries are we seeing going through the books? Somebody taking a look and going ahead and pulling up transactions and filtering and looking to see if how many journal entries are being made and who's making them. Do you have separate logins? I'm going to assume people are using QuickBooks. I know there are other systems out there, whatever it may be. Does every single user have their own username and password? Should they be changing it every 30 days or 60 days, regardless if it's required? Are they sharing their password with someone else? That would be really stupid, because if you gave me your password and I wanted to do something fraudulent, I wouldn't log in as myself. You know, but the problem is that most of the criminals are not smart. They do things and it doesn't make sense, and it's pretty easy to catch them. It just takes time to catch them, especially when there's no system of internal control to minimize the risk of it happening. The delay of reconciling the books and keeping them up to date. So we had a case where it was a multi-million dollar company, and they had one person who was in charge of all things travel. And so she had her own Amex card, so she could book travel for all the executives and do all this stuff. That was great. But at the end of the day, she ended up traveling quite a bit herself, honestly. And so she ended up, it was quite a large fraud case, stealing many hundreds of thousands of dollars, not even in the thousands, in the hundreds of thousands. And that case got settled pretty darn quick because it was really easy to catch her. What she would do is she would put, at first she used to send over the statements, and then she started putting them in Excel. And that's what she would send to the bookkeeper. So she wasn't even, the bookkeeper never even had access to the Amex statements unless that particular person gave them to her. So the system, the internal control system was nil. There wasn't one. And no, see something, say something, and no one did. And so that's what happened there. And then vendors that are created without an address. That's an easy one to catch. Pull a vendor list from, again, I'm just going to talk about QuickBooks because it's what I know. A vendor created without an address. Pull your vendor list. See if there's any vendors without addresses. Are there any vendors that you don't recognize? Again, yes, some of that's going to take manual work, but I can tell you payroll fraud takes about 3 years to catch, and will cost small businesses between $150,000 and $350,000. So I think it's kind of important, if you take a little bit of time, at least once a month, to pay attention to your business and what's going on. So that's key. Do you want to do a poll here, Jennifer? Are we good?
I think we're good right now. I just have a couple review ones towards the end, so you're good.
Cool. Okay. So steps to be prepared. Okay. I used to say, I don't want to scare you, I want to prepare you, but nope, I want to prepare you, but I also hope that I can scare you. And I'm not saying that to be like a bully person, but hey, let's be more prepared in the end of 2019 and then start 2020 fresh, and start to get some systems of internal controls together. And I will also tell you, if you think you're going to sell your company and you don't have systems and processes in place and policies, the value of your company will be decreased significantly. Nobody wants to buy a mess. They want to buy something that has value, structure, organization, and internal controls in place before they buy them. So what are we going to do? Background checks. You have every right to do a background check on anyone that you're hiring. You have to disclose it. It can't be something you do behind their back, but that's a simple way for you to go ahead and do that. So you can go ahead and do background checks. You can also do credit checks. So if you look at the Fair Credit Reporting Act, the thing you have to do as an employer, you have to get consent before you pull the report, the credit report. You have to give them a warning along with a copy of whatever report you received. You have to give them a copy of it if you plan to reject that employee based on that report. So you have to tell them why. And then you have to give that person an official adverse notice if we don't hire them because of what's in the report. So there are requirements that you do have to follow if you're going to do that. But if somebody's going to touch my money, I want to see how messy they are. If they have, a 500 credit score, and I can see on their credit report that they've got, $70,000 in credit card debt, and they only have $75,000 of credit, then it's just going to bring questions to my mind on whether I want this person to handle my finances or be a part of my financial team. So, prepare yourself and give yourself that opportunity. There's 10 states, I believe it's about 10 states that have passed laws that are prohibiting the employers from pulling credit reports. So you've got to make sure in your state that you check the rules around that. So that's really important that you do your due diligence. Again, the background checks, we have samples of what those will look like. And so a good resource on the credit checks is the Society for Human Resource Management. That's a really great resource for the credit checks, just as an FYI. So next, we've got online banking restrictions. That's really important. So Be prepared, minimize the risk. If you're going to give somebody online banking, make it restricted that they can't pay bills online. If you want your bookkeeper to do online banking, get a solution to pay bills through an app. They're very affordable. I've come up with about $300 you can run your entire company with, at least the minimum control risks with apps that work. So instead of giving them the online banking permissions, put them in an app to pay bills or receive payments. And then an app that pulls the bank statements for the person handling the stuff. Those are simple things that we can do to minimize the risk for you or your clients if you are an accountant. Again, the implementation of third-party solutions, we know this is like the third-party solutions these days, $300 you could be running a company with internal controls, not just efficient apps, which is what we've been taught and pounded into our brain, that applications are for efficiency. And I'm telling you, it's much bigger than that. It's for internal controls, and it's affordable finally for small business. Never allow check signing. I have a case right now out of South Chicago where they used a check signature stamp. So, but then in 2017, there was an email that went to all employees, don't use this guy's stamp without his permission, and don't pay this vendor without his permission. And they did it anyway. And it's a multi-million-dollar fraud case because of a check signing. Why are we signing checks? This is like ridiculous. That should be an automatic. We should not be signing checks. Don't give anyone else check signing permission. If you are a business owner, you sign the checks. If you make the decision that you don't want to use an app to help you, then you better be the one signing the checks. Business owners, look at your bank statements. Go online. Look and see who's been paid. Analyze your vendor transactions that happen in your bank account, your credit card accounts. I know you don't want to do it, but at the same time, I also don't think you want to lose $350,000 in a fraud scheme that has occurred because you trusted but didn't verify. So again, these are just things that are super important. So we're going to give some real examples of fraud. So we had a bookkeeper using similar vendors for personal, and they were the same as the business. So a bookkeeper was paying, I'm going to use an example, Verizon Wireless is a really common one, where the bookkeeper is paying a Verizon Wireless bill for the business, and she also happens to have a Verizon bill, and she pays that bill with the business. And she structured it where she would pay the business Verizon bill in the beginning of the month, and then towards the third week of the month, she would pay her own. And that's because typically no one would notice that a Verizon bill was paid twice. At just a cursory glance at a report, you would say, oh yeah, we pay Verizon all the time. Oh yeah, no big deal. That is a real example of something that we have seen and this has happened. This is a great one. Real examples. An ex-wife burns all business receipts because she's ticked off at the husband and they get a divorce. And so she burns all of his business receipts. I don't know what I don't know what her intent was. I don't know what was in her brain. But unfortunately, that business owner, the ex-husband, the IRS opened a civil audit and those receipts were gone. And so the IRS thinks that he was committing tax fraud by fraudulently burning receipts so that that wouldn't back up his tax return because the ex-wife burned them. And it was really hard to convince the IRS that he did not intentionally burn those receipts, that the ex-wife did. But I can tell you, he paid a lot more in tax because they disallowed a lot of expenses because he didn't have backup, even if it was the ex-wife burning them. So people, just so you know, this is a real thing. If the IRS comes in for an audit, you have to have receipts. Bank statements are not sufficient evidence in an audit. And so Receipt Bank, as I said before, and we put people on Receipt Bank on a very regular basis at Out of the Box because it's a simple tool to make sure there are receipts to back up the any purchases made by anybody, any employee at any level, but it also allows you to back up your tax return in the event of an audit. And so that's where I think we're missing the boat as the industry. And that's why joining forces with Out of the Box Technology, so that I could get to a broader audience to say, listen, you guys got to get this together, whether you're a business owner or you are advising clients. This stuff is happening. And I'll tell you another great resource when we get towards the end. So here's a great one. This happened to actually be a church. An employee stole from a prior employer, but doesn't put this on the application of the new church. Well, of course, why would she do that? And they wouldn't hire her. But they didn't do a background check. They did nothing on it. If all they did, not even a background check, if they just Googled her name, Google the name of the person, look at their Facebook. Like, if they had Googled her name, they would have seen that she had previously stolen from another church. And so that's why I'm just trying to say that, like, these seems, I guess maybe they're more common sense than they are factual. I don't know. But I can tell you that, that stuff is happening. Here's another one. The purchasing agent overbuys and steals the extra unnecessary supplies. Here's a great simple example that we've seen that is, again, this wasn't a big part of the case, but somebody who runs the office took a couple cases of paper home for the kids for school. That's stealing. So they're in charge of purchase. They're the purchasing agent for the office supplies, and they buy stuff they need at home. Happens. It really happens. It's absolutely ridiculous. This is one of my favorites. Payroll tax payments. They show that they're paid in the books, and the check's clear for the correct amounts, but the true vendor is the bookkeeper. So what ends up happening is the bookkeeper cuts the check to him or herself, and then changes it back over to the Internal Revenue Service. Payroll liabilities look fine. Looks like it went to the IRS, no problem. And then she makes sure she steals the notices that come in the mail from the IRS saying you filed your returns, but you haven't paid the taxes. And after 3 years, $350,000 out the door. Now, there's a double consequence there. The IRS wants their money. The bookkeeper has stolen, or the payroll person has stolen the payroll taxes. They don't put it into a savings account to pay you back, right? That's common sense. So what do we have here? We have $350,000 less of money in our bank account, but we still owe $350,000 to the IRS. We have a $700,000 consequence to the business owner. I don't know many small businesses that could handle a fraud case like that and survive, because the IRS wants their money, and it's a fiduciary responsibility as the owner of the company to be responsible for those payroll taxes. And I think that that's a really important point for you guys to catch. And like, it's really important that we see this stuff is real. And I want to tell you really good resource for everyone to go to. It is called, well, you just Google it actually. Report to the Nations 2018 came out about a month ago. It comes out every year. It's written by the Association of Certified Fraud Examiners. They survey practitioners, certified fraud examiners across the world, and they ask, what have you seen over the course of this year? And so we report to them and say, okay, I had these particular cases, and here's what the end result was of the fraud. It was a payroll scheme, and this is how much the business lost, or it was they stole cash, and this is what it cost, et cetera, all the different types of fraud. And that's what's great about that report to the nations, is it really gets into the details. It talks about large corporations, or large companies. They consider anyone over 100 employees as a large company, and that's how they do the cutoff. And they say anybody under 100 employees is considered a small business. And so you've got those two areas to monitor. And then what they do is they separate the statistics to say, here's what happens in the small business, which is what I pay attention to. I don't do corporate accounting. I do small business accounting, 100 employees and under typically. And so I want to pay attention to the statistics of what happened in 2018 to see if what I'm teaching you today is still relevant, and what I'm explaining to my clients and the reasons why they need to pay attention to the internal controls, why they're relevant, right? So that's extremely important for us to pay attention to that, even if you're not a certified fraud examiner. This has nothing to do with being a CFE. This has everything to do with implementing internal controls in the business that you own or the businesses that you advise. Either way. So I just want to make sure that the message is clear that this is still happening, and that we have to make sure that we are doing our due diligence as a practitioner, if you are one, in getting this word out and not burying our heads in the sand and saying everything's all fluffy. Because I can tell you, if you are a trusted advisor, whether you are a consultant, a bookkeeper, you are a CPA, you're an enrolled agent, you are whatever it is you do, and if you're advising a client on business and how they run their business, and you just pass this by and say, Brolin, you're full of crap, you're like going over the top on this, all it takes is one fraud to happen in that client, and you yourself are now filled with exposure. Because at least for CPAs, we have a duty to protect the public. That's our job. And so if we are not, buying in to this whole fraud, especially again in small business, if we don't buy in and start advising properly, not about efficiencies all the time about these apps, it's internal controls in place to run a business to minimize the risk of a fraud happening, missing a payment, whatever the case may be, that's going to cost your small business owner money, and potentially a lot of money. So again, I want to just summarize what we went through, and then I'm going to give you some additional resources that I think you'll enjoy, just to kind of give you some food for thought on what you want to do for next steps. So the different types of accounting fraud, like I said, if you go to that Report to the Nations report, it will tell you about all of the different occupational frauds that are occurring and have occurred and did occur in 2018. You can even look at the 2015 and look and see what this, which I do, which is really sad and sick. I know that. I know I have a little bit of a problem there. But I'll read the 2015 report and look at some comparatives about what the percentages were, the average losses for small business in 15 compared to 18, to see what has changed. Where's the shift? And why, and do a little bit of brainstorming of, well, why is payroll fraud? First of all, why is payroll fraud still a thing? Payroll tax fraud. Why do we have somebody in-house doing payroll? No, we should be using a third party to do our payroll. And there should be a process in order for a new employee to be added to the payroll. It shouldn't be done by one person, because there's something called ghost employees that people do. They put in a fake employee and information, and then they use their own bank account and they get another direct deposit every week. They're getting 2 of them. And if you're not paying attention and you're up at 70, 80 employees and you're paying people you don't even know you're paying, we have a problem. So understanding those types of fraud, you're going to find a lot of that great information in that report. Identifying potential suspects, and suspects is a little aggressive. I do agree with that, that it's potentially aggressive, but I want you to know that people do things not because they're bad people most of the time. That is not a 100% statement, but everybody has a fraud triangle around them that they decide whether they're going to act on it or not. And if you read the Report to the Nation, the majority of the frauds that are committed in small business occur with a first-time offender. So identifying potential suspects, these are people who have never stolen anything from anyone, but because they've got pressure for whatever reason, medical bills, sick kids, sick husband, sick wife, whatever it is, you know, they're under pressure. They're going to rationalize it. And because they have the opportunity and they are just, they have no other means of access to cash, they're the people that you've got to keep your eye on. And it's sad, but it is what it is. What are the red flags that you might be able to see where, wait a minute, how come we're always running out of that? It doesn't look like we're selling that much stuff. And, you know, what are the red flags that are in your business or in your clients' businesses that will help you say, hey, listen, I'm just going to do a simple little fraud assessment. And my fraud assessment is just going to be real simple by saying, okay, let's see. And as a matter of fact, if you go to Fight Against Fraud, we have it's a free client assessment. It's basically a client assessment form, and it's got 5 questions. Real simple, yes, no's. Do you have payroll? Yes. Okay. Well, here are some of the risks that you have by having payroll. You know, do you still write checks? Yes. Okay. Well, here are some of the risks involved with that. And so it's just a simple little thing that you can use, and it'll white label it for you if you want it to, but just at least to get your mind started in thinking, how do I even just get started in assessing myself? You know, take an assessment of your own practice if you're a practitioner, and go through and say, hey, where's my exposure here? And then move on from there. Minimizing the risk for your clients. Again, implementing internal controls are going to be your answer. And that report to the nations will help you identify where those risks are and potential risks for your clients. And then, of course, we went through a few real examples. I have so many more, you know, testifying in court, and divorces are one really big fraudulent area where one person has a salary and the other person owns a business, and now they're getting divorced, and now we've got a child support fight. And the business owner is defrauding the government because they're not reporting all of their income because it's in a cash business. And so that person who's making much less than the wage earner, the W-2 person, we got to go in there and we've got to dig up and tear apart the books. And we have to go in there and make sure that what is being reported on the tax return is accurate. And we just had a settlement just a couple weeks ago, because when I brought up all the junk, the business owner portion of the divorce, they realized that they were hosed right then and there, because the numbers are the facts, and the facts are what the court stands on. They don't, hearsay is no good. So they bring in a certified fraud examiner to go in and tear things apart. And that's where it's sad. You know, we're fighting over money for kids. Really? I mean, come on. And so, unfortunately, those are the types of things that we're running into on a regular basis. So here are just a few resources for credit. Here's a credit check resource, an employee credit checks that you can go ahead for employment credit checks. And again, you've got to check your state, make sure that you're, you know, not doing anything you're not allowed to do. And then as far as some small business fraud articles, I gave you a link to the acfe.org. Or .com, sorry, they have some really great resources that you can go to and that you can utilize to read about it. I call it an FBI channel that I go to also. I post a lot of that stuff on the Fight Against Fraud website so people can have access to those types of resources. But ultimately, at the end of the day, if you don't believe me, just go ahead and read these articles yourself, and you'll see. Here's a couple more, some small business fraud articles that I had, you know, come across. Journal of Accountancy, you know, issue from 2012, where they were already talking about small business risk, and some popular scams, which are, you know, you go out and read for yourself. They're pretty cool. Obviously, I can't really divulge a lot of the ones that I do, but there's so many out there, and I try to read at least one a day to keep myself, like, what happened yesterday, literally. Like, you could go every single day and look at yesterday's fraud that happened, because there's a fraud that was committed in a small business yesterday. Guarantee it. So, you know, just go ahead on out there. So I want to open this up for Q&A. Jennifer, if you have anybody with questions or any of that at this point.
Yeah, absolutely. I'll definitely, everyone who's listening, I'm just super engaged. Questions that you have, go ahead and send those over. While you're thinking of questions, I'm just going to do a review poll. Again, Dawn had talked about like who might be some potential quote unquote suspects in the workplace, and a lot of these were kind of things that I didn't think about really. I mean, my husband, really, would he be stealing from the company? But it's happening. It really is. And so just running that poll real quickly, while you think of any other questions for Dawn, go ahead and type those in, and we'd love to address those. So our first question coming in, Dawn, is it illegal to make your accounting staff take their vacations?
You know, it is not illegal if it's a company policy that everyone's required to take vacation time, then that's your company policy. And I think that's what I kind of mean when I say policies and procedures, internal controls. That's such an awesome question, because that is typically where they catch the payroll tax fraud, especially if you know, when you send your bookkeeper off and you find somebody else is picking up the mail, and you know, that's, or the warehouse manager, you get, you know, they go on vacation. So it is not illegal. You definitely want to check. Every state has their employment laws that you do have to follow. So you'd want to check those out. So from a legal perspective, I'm not saying anything from a legal perspective, but rather from a policy and procedures manual perspective, you have every right to make people take vacation, as far as I know, at least in my state. That's a great question, because that's if you find you got a secretary or you got somebody that's here, let me give you a great example on that question. I had a case where it was like a doctor's office, and people come in and did their co-pays. Well, the person who typically took the co-pays, she would accept cash for co-pays. And there's even a sign that said, you know, no cash accepted, but she would do that. And, you know, it's, oh, here comes Johnny, he's come back in for another checkup. Cool. It's $30, right? Well, she went on vacation. I don't even know if she wanted to go on vacation, but she did. Somebody else started collecting the co-pays. And she would say, okay, so do you want to use a check or credit card? And they were like, oh no, I always pay Mary cash. And she's like, well, we don't take cash. And then they went back and researched thousands of dollars in co-pays were going in the pocket of someone else, because nobody was double checking how many patients came in, show the payments, show the deposit of all the payments, whether it's, you know, checks or credit cards, and nobody was doing a double check on that. There was no internal control. So that's a great question, and that's a great example of what happens when people don't take vacation.
Absolutely. Thank you. That is a good point for sure. The next question is, should I fire someone on their first offense?
You know, I think we all love this answer. It depends. It depends on what the offense was. So if you can give me a better, like, I would just say, like, if somebody stole money, or I found out that one of my staff was doing bookkeeping on the side, that would be termination. You're done. No warning. You're an at-will employee. I don't even have to give you a reason. But something like that is an offense, such as, or if somebody took something and they're like, you know, I'm sorry, I didn't mean, I brought it back or whatever. But you would be certainly, you know, especially if it was a money thing, I just wouldn't want them in that position if they've stolen anything from a monetary or inventory perspective. I would have a pretty big problem with that.
Yeah, absolutely. And I think that goes back too to what you were talking about, Dawn, with trust but verify. I think that definitely breaks that trust aspect of it. And I would be really watching that employee if you chose to keep them on board with you in any position.
Yeah.
Certainly be under the microscope, right?
Yes, they would. They would be under a microscope for sure. And maybe you shift their position to something else where they don't have that opportunity. And that's where, you know, where you have to make a decision, like, especially if it's like your brother or something, you know, just have a fist fight in the back, and then, you know, move on and tell them next time it's going to be a worse of a beating. You can't really do that. Don't do that. That's not okay.
We're not condoning violence here, right?
We're not condoning violence here, but if it's your brother, I mean, come on.
Absolutely.
Any other questions?
I don't see any other questions coming in. So, Dawn, if you had any closing comments or anything, I had one more poll question before I take it back and just kind of close us out. So I'll give you your last words, and then I'll run that poll, and then we'll close out today.
Sure. Yeah, I guess what I'm saying is, I know I'm a little aggressive about it, and the reason I am is because I see it and I work on these cases and I see people's lives destroyed by fraud. And I guess so I just don't want it to happen to any of you or any of your clients. And so, I guess I hope you just at least take away the fact that there is risk and there is risk in business. And unless you have bulletproof internal controls, I believe you're at risk. And I'm even talking about myself. I mean, I know that I have some areas that I have to continue to improve and change, because technology is going to change faster than we can't stop it. And with the technology, there's the pros and cons that fraud is going to be maybe easier to perform a fraudulent act, or if we embrace the technology and utilize it to prevent and minimize the risk of fraud, then we can maybe win. But I really encourage you to go read the Report to the Nations and just to go see for yourself what the facts are. Not an opinion, but a fact on that Report to the Nations. And I just want to thank everybody for hanging in there. And I hope you learned something. And we're going to continue to talk about fraud and the fight against fraud and ways that you can get involved in your practice with regards to consulting on fraud and internal controls in small business. So I hope that you enjoyed it. Go check out the Fight Against Fraud. We're here to help everybody. We need a whole team of people.
Awesome. Thank you so much, Dawn. And absolutely, we're going to have Dawn back on pretty regularly now that she's in the Out of the Box Technology family. So look for those webinars coming up. You do an excellent job, Dawn. So thank you so much for sharing everything.
Thank you, Jennifer.
Give one more poll, and hopefully these are a question about what are some red flags that you're going to be on the lookout for going forward. A lot of things that Dawn touched on today, just keep those in the back of your mind. Again, not that we're hounding our employees or want to just, run such a strict, tight ship, but at the same time, this is your business and it is something that goes on and it's extremely important. So just one last poll for everyone there. We do appreciate everyone sticking with us through the hour and taking these polls. And again, there's a survey that'll come with a follow-up email. This session is being recorded, so if you wanted to, watch it back, if there's some things you wanted to revisit that Dawn went over, you'll get a link to that recording in about an hour from now. We'll get that out to you. So definitely keep it in your back pocket as a resource. I think that this was really full of a lot of great information. So Dawn, thank you so much. And with that, I'm going to take things back here and just put up the next couple of Technology Tuesdays that we have on the schedule for October. I definitely want to point out next week, we're going to do a What's New in QuickBooks 2020. That new edition just came out about a week ago. So our staff has been really digging in and exploring the new features and what's great and what needs to be ironed out a little bit. So definitely join us for that. We're going to just really dive into these new versions. And if you have questions or if you've experienced, a pain point or just kind of a hiccup in the software, definitely join us and we'll have that conversation back and forth next Tuesday. Then a couple more great presentations throughout October. We've got ADP joining us on October 15th with some common human resources myths and misconceptions. And then to close out the month, our Chief Technology Officer, Andrew Abrams, will be on the line with us, going over the top reasons to host with out-of-the-box technology and the benefits that you can see there. So we hope you join us again. These are all completely free. We'd love to have you. And if you have any questions about the fight against fraud or anything with Technology Tuesdays, things that are coming up, things we've presented on in the past, definitely reach out. We're always here to answer your questions and open that conversation. So Dawn, thank you very much. Thank you to everyone who joined us. We look forward to seeing you again soon.